Over here, head systems trader at Macro Ops, and I've been day trading a bunch this week and sharing my trading kind of in real time as best I can on Twitter, just by screenshots versus turning on the camera and streaming. I'm in the suburbs of Guadalajara, Mexico, and we are way out countryside suburbs, and the internet is not good enough to live stream. So maybe when I get to we get to our house, eventually I can start doing a little more live streaming. But nonetheless, I just wanted to go over what I've been trading, how I've been trading this week. First of all, let me start out with I keep day trading as a very, very specific and focused business of mine. So, as many of you know, my wife and I just kind of travel the world living in Airbnbs until recently. We decided, as we have a child on the way, we decided to kind of get a more stable location and work from there. We're still going to travel, still going to live wherever we want to live and kind of do that thing. But we, while she's pregnant and going through everything, we just want to make sure that we're in a more static place. So why I bring that up is trading is, I treat day trading as like I'm a professional athlete. That's kind of cocky, but the reason I do that is because I have to prep myself and be ready for the game like I would a basketball, a football game when I used to play ball. So I'm practicing drills. I have a very extensively researched system that I trade. It's quantifiable. It's not, there is some flexibility to it with the price action side, but that part has been, I've quantified that and I know how to apply that in a system environment. And so, for example, before I day trade, I like to get about 10 or 20 warm-up trades, paper trading on like replay. So I'll go up into replay up here, choose a period of time, and I'll start playing that live at super fast speed. That it's at, like you're doing shooting free throws, doing layups, dribbling, passing, running plays, doing your drills. That to me is the exact same thing. So I won't just like roll out of bed, look at my screen, and go to work. I have a whole routine, just like I would on any game day. I roll out of bed, go to the bathroom first thing, and then before anything else, I lay down and I do some deep breathing meditation for 20 to 60 minutes. Sometimes even longer. That gives me that really like calms the world and puts me in a great place. I'll jump in a cold shower right after that for 2 to 5 minutes, depending on how cold it is and what how much I need the cold. From there, come downstairs, make myself some coffee. I do my day planning. So I go straight to my day planner. Still no, at this point in time, I haven't looked at my phone or screens or anything. No messages, no emails, none of that. And I'll get into focusing or going through my day planner and what I need to accomplish that day, and then what I need to what I did the previous day, kind of update that. That gets me to the point of kind of right around the open, and so I don't trade the open. I usually wait at least 30 to 60 minutes after the open to get in a trade. I just don't find there to be an edge in the open trading the way I trade. Plenty of people can. I've just been told forever, you only trade the open by professional, or open by amateurs, closed by professionals, or whatever. It doesn't matter that it rhymes or that people repeat it. It doesn't mean anything if you can't test it for yourself. And I just found that I have the best moves intraday after at least the 30 or 60 minute mark, most common. So I usually go take a walk, do some stretching, or just kind of get up and running, maybe do some reading or something like that. so in the time zone we're at, 8:30 is the open. It probably around 9 is when I started paying attention to this, because we got that first opening volley, and so then I'm prepared to do it. Now, I'm going to get into the system and the way I trade this and how I get that information, but I wanted to start with the knowing that I don't just treat this lightly. So I have that whole morning routine. I have to do my warm-up trades, my practicing with replay data in a paper trading format. The reason I do that is because I get my I warm up my fingers and manual dexterity and hand-eye coordination. I get my mind in the game. I see my setups. I relive them, and so it primes me to be ready to take on the trading day. If I can't do that, I won't trade. So a little bit further away from that is if I'm traveling, or if I have meetings, or if I have anything before or during the trading day that might interfere with my trading, I just won't trade that day. So if I have a phone call, let's say it's 11:30 right now. If I have a phone call and at 9 a.m. I'm seeing a good setup, I'm probably not going to take that trade because I have a phone call, or I have a meeting, or I have something that's going to I'm not going to be able to be fully engaged in the meeting, and I'm not going to be fully engaged in trading, and both of those will hinder my performance. So very strict on that. If I'm traveling, usually on a travel day, let's say I land yesterday at, 8 o'clock at night, we get to our Airbnb, we set up, do all those sort of things. The next day, I won't trade. I'll do my normal end of day swing trading, but my day trading, I won't day trade. I want at least probably 4 or 5 days straight in a single location during the trading week, I should say. 4 or 5 of those trading days, because usually there's a day of I'm practicing, I'm getting warmed up, and then I'll have a couple of days that I can actually trade it, and then I need to kind of come off that, wind down a little bit. So if I'm not in a location for a set period of time, I won't day trade, but I will do all my swing trading. I will do all my normal stuff there. I just won't take the effort to do it because I know that I'm not going to perform well day trading. You guys have seen, if you've been following my stuff or seeing these stuff, you can see I can trade, and I'm not trying to do anything special here. I'm documenting what I'm doing. I'm sharing it. I get feedback from people. I learn. That's why I do it. So it's very important that I am showing up as a trader effectively on those trading days. So kind of that sets the scene for what trading looks like for me. I trade from my laptop. I don't have any external monitors. I have a MacBook Pro. I use TradingView charts for my analysis, and then I have interactive brokers and a backup broker in there too as well, just in case something goes wrong. I've had no problems with interactive brokers. I only use it for execution. I'm not doing anything fancy in interactive brokers other than going to the order entry screen, entering my price, entering my size and type of trade, and then throwing that in. And then that takes a couple of seconds, and then I'm back to my charts to pay attention there. Also, I have noise canceling Bose headphones on during the trading day with a Theta Waves playlist, or I'll do classical music usually, but nothing with no words and no videos, no like YouTube videos or no commentary. I just want to be extremely focused on my trading day and what I'm doing there. Or I'm not going to do it. I'll just not trade and listen to a podcast or whatever. So let's go through this week, because I put up 3 charts. Yes, okay, we got that one. I'm not on the internet. Let me see if I can connect to my modem here if it has enough internet to I'm in a dark basement. I'm actually in this amazing basement of this house, but it is an entirely concrete house. So, okay, good. So my connection is a little weak sometimes. Okay, good. So I have 3 trading days. I traded 3 days this week is all. So let's start on, and I was actually surprised that today was Friday because I only traded 3 days. I traded 3 days this week. So let's start out with the way that I find this to be useful. Let me get, so we're going to do ES plus YM. So what I'm doing here is I'm getting all 4 of the main indices of the US equity markets. I'm adding them together, ES plus YM plus NQ plus RTY divided by 4. So that's going to give me my own, that's going to give me like my own average of all these. And what's important to note is that we are in a bull quiet regime. Now I have an indicator that I use called SQN. I made one on TradingView. It says SQN Christie Fallible if you want to use it. I have to update it. There's something off on it. But I don't actually need the indicator to understand this, but it's nice to see. When we have these dark colors and this rising trend, we are in what's called a bull quiet regime. And you can see after September's weakness, it's a notoriously weak month. So surprise, we didn't really have a bull quiet regime. It ripped up and then it fell apart. And from that fall, we got our double bottom and we've done nothing but go higher. We've had a couple of pullbacks here, but what this is, and remember, this is all 4 indices together, not just one of them. So what characteristics of a bull quiet regime, I'll put this on my chart here. The best shorts fail. So what's important to note is on a bull quiet regime, the best looking shorts in the world, like this one right here, fail. Like this one right here, you know, these 2 really dark bars made it seem like we were getting into that major thing there. Breakup. This failed breakout long worked, but it didn't work very long and it just kept going. So that's your indicator, one of the indicators. If you don't have the bull quiet, it's just that you go higher quietly. It's just every day is going to be a gap. You know, we got our thing here. Next move up, we got a gap. We got a gap. We got a gap, and then pull back. And then what happens? That pullback is negated. It was just an opportunity to get longer into the end of the year. So what I know about bull quiet regimes on these specific markets is I just don't trade against them. I don't fade a bull quiet. I'm only looking for longs. If I don't have a long on any of these, any of those 4, and I don't trade the S&P all that much, rarely at all. Darren at DARJOHN25, and I talked about that extensively in our podcasts. Last couple of podcasts. It's just there's no advantage for the individual trader to be trading S&P like the advantage or the edge that you get trading Russell, trading NASDAQ, even trading YM, the Dow. ES, the S&P is just not as good. And you know, all my trading stats, I know that one is just not. It underperforms, so I don't trade it. I don't need to trade it. There's nobody who says you're only an S&P trader, so you trade it. I just trade what works. And usually Russell is my thing. So I stick with that. So let's get going to how I trade this system. I like to put a starting line on my charts so you can see where the market open is. And what's very typical, try to get that in a little bit better way. There you go. And what's very typical of this market regime, this bull quiet, is you get an initial opening fallback. So remember, let's look at our chart. We've just been going higher and higher and higher and higher. So a lot of people are looking to, they're like, we're taking profits. We want to get out of here. Or maybe, some bigger people are trying to manipulate this so that they can buy more down in here. Whatever you believe about that is what you trade. All I know is that I don't have a belief I don't have a dog in that fight. All I can say is that when we're in a bull quiet regime and I get an opening fall, I'm going to look to go long. I'm not going to look to catch this short on the open. It's there. And you can build your own strategies around that, because these are pretty big moves. You could catch, one, two, probably a 2-hour move here really quick. I just don't have, they get caught in there quickly. Sometimes it takes an hour or so to work through. Sometimes it's just boom, 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 and then it sits there for like about a minute or two and then rips higher. I think we had that on one of the days this week. So what I'm looking for is the first half hour of trade, and I'm going to go ahead and put my second bar up there. So after this period is when I'm like, okay, I'm actually interested in coming back and taking a look at what's going on. I will take a look on the open and see if we get some weakness. That'll warn me that, hey, there's, you're going to have to pay attention in about a half hour. So get everything organized. But if this thing just takes off running to the upside, I oftentimes won't even trade the rest of the day. I want to be focused on a certain setup, and if I don't have it, I'm going to step away. If I do have it, I'm going to take it every time that I'm available. So on this day, I went for a walk with my wife during the open, and it was no real reason that I wasn't in front of my screen for these 2 missed trades. It was just me being out for a walk, and I needed that to kind of clear my head, hang with my wife, and kind of enjoy the neighborhood. So, like I said, I missed these 2 opens. This one here is a buy with your stop below there. Comes back, boom, boom, boom. I have another buy, like right here we have. So I'm looking for is long tails. And so weakness to get caught, and then long wicks or tails on the bottom to indicate that bulls or bears are attempting, but bulls are taking over. So I didn't take the first couple because I wasn't there, but I did get this one. So almost kind of like a hammer. We've kept the bottom in, put in a complex bottom, and especially when this one came down and we got lower low here on that, that's really nice. We got a big spike where they caught it, and then they attempted again. So, and if you can see, we're below the Globex session. So probably, I think right here was right around the low, which we kind of bounced off of right in this area here. The Globex session held. Pay attention to that, how low the overnight trading gets on a swings, because that'll help give you an idea of where your floor is. Okay. Not that is the floor. It's just that'll give you an idea that this is potentially a long setup. So again, I got this type of trade thing here. I put my trade parameters in. I got basically long. I probably was the only one who bought that based on the small time it spent there. Came back and never really gave me, it initially gave me some heat, but then we ripped higher. And usually what happens is after this whole thing, this is very common, where you get a really continued move higher. And then we get to, so I'm long here, my short's in here. Let's call it, what did I put, 1660.8. So what I'm looking for is, and then my stop's going to be just slightly below that. What I'm looking for is a move up, and then this is what I call first look back. So we know the top of the range is going to have some, it's just statistics. Bollinger Bands are statistics. They give you 2 standard deviations of the median price. So what I'm looking for is it comes up here and it just kind of bangs around. That's fine to me. This is called first pullback. You can use this one to get long, to add, I should say. But I like a couple more than just one dark candle to get long. And so we had a little bit more, and then I got this really nice hammer here, and or hammerish type candle. So I put a buy stop above that to add to my position. If it just kept coming back down to midline or even lower, I would have I would have been not filled on that trade because I'll use a buy stop a tick above, and that's really important. So next, this is called first look back. I call this first look back. Whatever you guys want to call it. Who knows? That's just the terms I use. Okay, there we go. So what I'm looking for here is probably a little bit of sideways consolidation. And let's see if we can find, okay, so Globex overnight was like right before the open. And we have a similar thing today take shape. But so I'm paying attention to these two lines. So if we're going to bang around inside that line, we're going to have a mean reversion day. And I'm going to look to trade this thing differently. I'm looking for failed breakouts to the upside, but I'm not going to take those. I'm looking for pullbacks to the bottom, and I'll be adding to getting in long. So I went and just added at first look back, and you see we start to take off a little bit. So at this time, I'm also going to raise my stop up into here. After I add to my position, I'm going to look at this swing low. So now no matter what, I'm locking in like 1R. Even if I take my loss here, I definitely have some profit there. And we're off and running. So everywhere along the way, I'm going to raise my stop because, now we've got that trade. I think I raised another pullback here with a failed, or that's kind of a double bottom type candle formation. So I'm going to go ahead and raise my stop there. And then as you see, we get back up to the top here. We pull back into this area. And so we have another pullback. So now I'm looking at pullbacks to the midline while we're in a trending phase. You see how this thing just keeps trending higher? Anytime we get a pullback with a hammer or a doji type candle, I'm going to look to buy, add to my position on top of that as we get above. And it works. And I raise my stop again. So now my stop is under this one here. It's probably a couple ticks lower. Let me just do that. So I've locked in all this profit, and I'm looking to raise my stop again because now we're getting into the last hour or two of the trading day. So I'm not looking to add. I'm just looking to tighten it up and see what we got. Now a smart trader might have put their stop right here. I was just letting it run. Now we get this pullback here, so another smart trader might have raised their stop to that point. And so once we, where did I get my exit? Do we trade? Okay, so here's end of day. Oh, okay. So here's end of day. That's why that line's there. So we hit end of day here. Let me put my vertical band so we can see where end of day trading is. That's the last candle. As we were coming to the end of the day, I just put a stop in here and put it. I could have put it below the swing low, but in either case, I'm going to be out end of day on this sort of trading anyway. So I literally just hit the sell button. So this day traded perfectly. I got 6R on the first trade, 3R on the second trade. So total of about 10R. But that's, yeah, so a good day, a really good day. Bull quiet market regime on daily indices. We did that. So we know we're in a bull quiet regime. No shorting, only looking for longs. Done. That's just, I've eliminated any other trade out of my world from there. So the typical cadence is down on the open, gets caught by a double bottom or variance of a double bottom. So knowing price action and candlestick patterns is useful. Trades up to the top of the range, then has first look back. At first look back, I add to my position. If it fails at first look back, we're probably going to end up in a sideways day. Or we're going to maybe take another stab at it later on. But for me, I'm just that's just how I played it. And then finally, I'm going to look on I add on first look back, and then I'm going to add on pullbacks to midline with reversal type candles. So anything with a tail and a bullish body is usually indicative, even just any doji type candle is indicative of reversal. But as you can see, it was just getting very narrow trading here, blast, and then came back in. And so that was it. I'm just going to trail stop the rest of the day. Not trail top. So I'm just going to trail stop the rest of the day and be set. So let's go to, that was Wednesday. Let's come into Thursday. Let me get to mark my opens. 8:30, and then 9 is when I'm looking to show up to work. Okay, so I show up to work in here. I'm looking at what's going on. I have, again, another double bottom, complex bottom. As you see, we spiked low, came up, came down to another low, spiked up, and then we did, so what this people would be thinking is, traders thinking that this is a breakout to the downside, this one right here, because we failed to go higher with this candle. We go lower, and it gets lower than our previous swing low. So a lot of people are thinking, okay, this is where I want to be selling. And they do initially, but then bulls come in. They have got their buys down in here, right? They're looking to buy, down in this area here, because, let's realize we're at, this is Globex lows again. So let's keep that in mind. There's one Globex low, and then that's the overnight Globex. And then this is just kind of like the opening Globex. And it's giving you a signal. It's not precise, but what it's saying is look for, we're in a bull quiet regime, so we don't take shorts, and look for a weak bottom. So double bottoms to me are bread and butters. I'm looking to get long, so I put my buy stop here. This thing rips. So I'm in at 1666. This thing rips 3 points, maybe 4 points on me right away. And then as soon as we hit that resistance up there, we get our first look back. So we get that resistance and we start coming in. So now I'm looking for, we've got 1, 2, 3 down. So I'm going to go ahead and look for a reversal type, which I got right here. So I'm going to go ahead and get long or I'm going to add to my position there, which I get filled. And then it kind of goes against me again. But it does that same thing. It goes below, and it makes people think that it's failing, and then bulls show up to work. So another thing is to put a buy stop above that, because if bulls can overpower that candle, then you're going to have, bulls are going to take it and run. So I get in here, a little bit of weakness, takes off. As it starts working in my favor, I raise my stop up to the swing low, pull back. At first, so this is the first look back, so I've doubled my position here. And now I'm looking for, so now we got some weakness, didn't do all that well. So I'm looking for pullbacks to the midline that hold. So we've got 1, 2, 3, 4, a strong bull bar, and then another bear bar. So to me, bulls are attempting, but bears are throwing a lot at it. And they do. And we go sideways a little bit. So for me, because it's a Thursday, I'm happy to stay in this trade, and knowing that we're seasonality, we're going to drift higher. So once we got there, once we got that, so I did not add on anything here. So that's the difference, as opposed to buying any of this. Just remember, I want to get a reversal type candle at the midline, and I didn't really get anything that said to me, other than like this sort of dip that blasts through. That's the only reason I would have. But at this point in time, I'm getting cautious, and we're heading into the afternoon here. So yes, we have this great trend here, but again, as we look to take out our intraday high, it gets rejected and falls back. So at this point, I'm looking to exit. And I did somewhere in here, I guess, I don't know. Somewhere around in here. So I, look there, and regardless, see how that hammer really just, all this weakness, and then the battle, and then the bulls really took charge. You can see that gave us a blast off. I'm out at this point in time. I've locked in my profits, and that was into the end of the day anyway. So 3 is the end. Okay, so as we're coming into the end of the day, I'm realizing that we're getting into a mean reversion market. I think I exited somewhere around here. So that was, so we got 4R on the first move, and it looks like 1R on the second move. So let's go. I don't have my notes in front of me to. But somewhere around there, that's about what it is. And then trading day's over, and we come into today. So today, you'll notice that I've already drawn my lines on the Globex lows. We've got 3 areas that I'm paying attention to. Okay, we're at the open. I've marked, okay, 830. I've marked my Globex high and 1, 2, and 3 lows. It's interesting that the lowest, or the low swing low closest to the open is one that has been holding in this regime. So that's something I'm gonna start taking notice of. As you can see, it doesn't hold completely, but it generally shows a pattern of this is where we're looking to be in. Okay, so let me throw 830 to 9. Okay, 9's right here. So this is my opening range. Same thing, bull quiet regime. We're in bull quiet. So I'm looking to only take longs. We know right on the open, this is our Globex high. So I mark that. And then our most recent swing low is kind of the range I'm looking for today. So into my hour or half hour that I'm just letting pass. And, you know, at this point in time, I'm thinking to myself like, oh, maybe it was a quick one today. But knowing what I know about my strategy and, you know, the statistics that I have on my strategy, I would have been fine if this thing ripped and I didn't take the trade because I just don't have the proper setup for it. But I was looking for a little bit more weakness that just couldn't hold. Another attempt. I wanted to exhaust the bears. I wanted to really wear them out. And that's why I wait until that first half hour. So, okay, so they come in and I think so I use this reversal. We got that high and we got a lower low that fails. And then it was just kind of like bulls and bears fighting. So you can either take this white candle or this one, which I did this one. You would have had bigger position sizing with this candle, smaller position sizing because of the length of the risk range here. And immediately we get good move. So let's call it 1674.50. We come to the top of the range. I'm looking for a first look back here, but as you notice, first look back is just too bullish. I don't get enough of a pullback. You can say that means it's an extremely bullish environment, and that does signal an extremely bullish environment for sure. But the way I trade it, I'm not going to add to a high breakout because I'm looking at we're up near the top of the Globex high and we're at the top of the Bollingers. So in my world, I want to let this convince me that was a place, the pullback. And so I would have expected a pullback further on. I didn't get it. I didn't get it till up here. And now I got my first look back that I took. And so we're at Globex high. So as soon as so this is the high right here overnight. Shorts have their stops right here. So if they're short, a lot of the quick traders are looking to short this and catch a quick move. And you'll see it works for them too. So you can build a whole strategy around it. But what happens is you get this quick spike, and then most often the algos step in and like, okay, I know people are going to they're going to expend their, profits are going to be taken here for sure. But also shorts are going to get stopped out. So it's going to spike higher, and then that's going to die. It's going to have that artificially spiked energy. It's going to turn and drop a little bit. So we got a couple pullbacks. I looked to get long. I think I got long either here or here. I added to my position. I brought my stop up to here because I wanted to lock in. So that would have been 1, 2, 3 or 4. Let's see, 1, 2, 3. That's about 3R actually. I think I noted it as 1.2 or 2.2. So first look back, I added to my position. It got met by real sellers, and so I got stopped out. I just took the stop. And we'll see what happens from now. The market's still open. I just ended my trading day. Let me go ahead and update this. This is actually 1, 2, 3. That is a 3R. 3R on first position, and then minus 1.2. I got stopped on this position. Let's just call that's 1R actually. I don't even know if that's 1R. It's less than 1R. Let's call that 0.8. 8R. For a total of that. And as you can see, that was the right move. Thanks, and like, subscribe, do whatever, follow me on Twitter.